Hello, and welcome to Quilter Cheviot's Markets Uncut podcast, your weekly insight into the topics and trends that we have been exploring for you here at Quilter Cheviot. Remember, so you don't miss future episodes, be sure to hit the follow button on whichever streaming platform you are listening on, or alternatively by following hashtag QC Weekly Comment on LinkedIn. I'm your host, Oswald Oduntan, Investment Manager for the Managed Portfolio Services based out of our London office. And this week, I am pleased to be joined by regular podcast guest Richard Carter, our Head of Fixed Interest Research, and Equity Research Analyst Ben Barringer. With us nearing the end of November, it's been a good month for investors. Bond yields have steadily been declining, and a positive rally in both the US and UK stock markets have offset some of the losses seen last month. And last week, we saw the release of the autumn statement by Jeremy Hunt, which came with a series of reforms to ISAs and pensions, business tax cuts worth £11 billion, and a reduction in the main rate of Class 1 national insurance contributions by 2%. The Chancellor's aims for these reforms is to boost economic growth. However, after the announcement, we saw the Office for Budget Responsibility provide a reality check, revising down their forecast of the medium-term growth rate of GDP to 1.6% from 1.8%. Richard, if I can turn to you first, what are your thoughts on the statement, and will it really boost economic growth?
Good question, Oswald. I'm sure it won't do any harm, and it might help at the margin, the sort of tax cuts, but I don't think it's going to be a big game changer or provide the sort of boost that maybe the government would like us to think it will. Obviously, we've got to remember that interest rates have been going up for some time, and that's going to slow the economy. And as you were saying, the outlook for growth in the UK is kind of fairly anemic, and the cut to sort of national insurance, all the rest of it, probably isn't going to absolutely make a massive change. And also, we've got to remember that the government's doing its best to sort of sell the tax cut, but they've actually taxes have been going up for some time, understandably, in a way to sort of pay for the legacy of COVID and the cost of supporting the energy market, given what's been going on in Ukraine. So, perhaps a step in the right direction from the government, but won't make a huge difference, and probably partly to do with trying to help their chances in next year's election, which obviously at the moment aren't looking great. So, let's say not a game changer for the UK economy.
Thanks. And as you were saying, as time goes on, it's becoming more apparent that central banks are near the end of their rate rise cycle, and we have one more monetary policy committee meeting before the year end. What implications, if any, does the budget have for inflation and interest rates?
Yeah, and none, I think, for the next meeting. You're right. There's one more meeting to go. This year. There's also one for the Fed as well. You'd have to say 99% chance, if not more, actually, that the Bank of England won't be making any changes to interest rates at the next meeting. Very much on hold for the time being, and we'll see what happens next year. But the moves that Jeremy Hunt made in the autumn statement won't make any difference to that. I suppose at the margin, as we go into next year, people are talking about interest rate cuts potentially at some point. If the moves do kind of help the economy a little bit, do help growth a little bit, it might just raise the bar for when the first interest rate cut is going to come. So that's possible, but we'll have to wait and see on that next year and see how the economy does. I mean, we don't yet know when the election's going to be. It could be May, it could be October, sometime like that. But I would expect, if the public finances can take it, we may get another sort of budgetary giveaway sometime in the spring before that election. So the Bank of England is obviously watching that, and if the more the government does in terms of cutting taxes, the less likely they are to cut interest rates. But I think we'll have to wait and see on that and see how the economy does next year.
Thanks, Richard. We'll keep our eyes peeled for an early election coming up soon. Ben, moving on to you. Just moving on from the autumn statement, we're now firmly at the end of earnings seasons, with headlines dominated by the big tech names, some of which have been discussed on previous podcast episodes, but one that has not been covered just yet and probably the most anticipated was Nvidia. Can you give us a summary of the company's results?
Yeah, good afternoon, Oswald. Thank you. Look, it's quite difficult to summarize quickly, but let me try. So I think there are four things that investors were thinking about. They're thinking about the numbers and the guide and the guidance. They were thinking about China and what's happening there. They were thinking about what happens after 2024, i.e. 2025 growth. And then they were thinking about this debate between inference and training. So when you train a model, you use a lot of GPUs, but then as you use the model, you can use lots of other different types of processors. So just going to those very quickly, the revenues were up 206%, and that was a 12% beat of sell-side expectations. But NVIDIA's built a reputation for beating their numbers. And so actually the buy-side number was bang on that the number they produced. So that was decent. That meant the stock was flat. What's driving that 206% revenue growth, of course, is the strong demand from cloud providers, cloud computing providers, internet service providers, software companies, and enterprises generally starting to do more generative AI. And remember, NVIDIA sells not just the chips, but also the software called CUDA, and also the networking from an acquisition they made called Mellanox. And all of that gives them quite a good moat, particularly in training. And that means they can deliver gross margins of 75%, which are pretty credible. So the numbers were pretty good. The second piece is around China. Now, clearly the US has been trying to restrict the export of high-end chips to China to basically curb their development of AI. And for NVIDIA, China represents about 25% of revenues. They say that will be down very significantly after the most recent US-China restrictions, but they were still able to guide very strongly despite that, what's going to be quite a big drop off in Chinese demand. And so that shows you that even though one sort of leg of the story is falling away, other areas are sort of picking up. And so the guide was for 11% sequential growth and 230% year-on-year growth. They also made some comments about them growing in 2025, which is sort of my third piece. So people are very worried that it's sort of a 2023, 2024 story, but what happens in 2025? So they put that to bed as well. The final piece, which I still think remains a debate for NVIDIA, is around training versus inference. And in training, NVIDIA has about an 85% market share. But as you move to inference, as you start to use these models, there's much more competition from businesses like AMD, from Intel, from ARM, the Cambridge-based company that power all of our smartphones, and then also custom silicon done by the cloud providers themselves. So Amazon have their own, Google has their own, and so does Microsoft. They've just announced one. So there's still the training and inference debate remains probably the biggest thing I'm working on at the moment. But look, we like NVIDIA. It's a very strong business. As we move to that transition, they're going to be less dominant, but they're still a formidable business, and it's been a great investment this year.
Thanks, Van. And just on the inference and training models you've mentioned, one of their customers is OpenAI, who have been using their chips to help train the famous ChatGPT model. I'm sure several listeners have come across the news in the past week regarding Sam Altman's brief hiatus from the company. What are your thoughts on the OpenAI saga? And does this raise any flags for Microsoft or the broader sector?
Yeah, so let's try and summarize what was quite a lot of amateur dramatics last week. Look, so Sam Altman was sacked by the board after they, quote unquote, lost trust in him. Now, what exactly that means, we shall see. But the important thing to know about OpenAI is it's a non-profit business that has a board that is responsible for that non-profit. And then as a sort of a subset of that, or a subsidiary of that, is the profit organization. And that's the thing that charges for ChatGPT and has to sort of account for all of the costs of doing all the training and inference. And that's what Microsoft has its stake in. It's just less than 50% stake in. And so Altman was sacked. Lots of the staff threatened to leave as well. In fact, pretty much all of them. And Microsoft said they were going to create new homes for those people. Now, just before the Thanksgiving holiday, Altman was reinstated. The board was changed quite substantially, and that board is very interesting because only Adam D'Angelo, who was on the previous board, is still there. Then there's Brett Taylor, who famously was the guy behind Google Maps and also worked at Meta and also Salesforce. So he's quite a formidable guy. And then nobody would have seen this one coming. Larry Summers, who was a former Treasury Secretary. He's also on the board. So those three are the sort of formation of the new board. And that will be expanded out to 9. But the real issue for OpenAI is still these, governance issues and this structure that is quite difficult to, it's quite opaque, and it's also quite difficult to invest in. So I still think that there's, going to be further dramas out of OpenAI as it relates to the governance. Now, I mentioned about the reason why Altman was dismissed. There's going to be an independent investigation into that. Now, these things are quite usual when you get early stages of a technology and you get lots of founders and there's lots of tensions between the board and so on, and it's normally something either about money or about ethics. But what's sort of come out of the woodwork in the last couple of days is that it looks like OpenAI has been working on a new type of model called Q-Star, and Q-Star makes an attempt to allow the model to start reasoning, basically. It's quite complicated, but basically what it's trying to do is say, here are all my choices, and how can I maximize the outcome based on choice? And that's a very different type of model to ChatGPT. So if you can combine those two things, you can get something that's able to summarize and sort of talk to you, but then also reason as well. And so that might, the ethics and the readiness for prime time of the Q-Star model might also be behind the Sam Altman dramas. But expect more of those as we go on. You mentioned about what it means for Microsoft. The most important thing, I think, for OpenAI is that they keep that core team and the culture of innovation that happens. And Microsoft is sort of aligned to that. But then obviously lots of the OpenAI compute happens on the Azure platform, and so as long as Microsoft can stay aligned with OpenAI, then that compute and that expertise can be exploited by Microsoft.
Thank you. Quite an eventful week for OpenAI and Microsoft. And lastly, probably good timing for you. Amongst all of this news, you recently held a Future of AI seminar in our offices. Could you provide key takeaways for our listeners?
Yeah, I certainly can. Thank you. And AI has been, we've been investing in AI for 10 years, but AI has been front and center of particularly generative AI of a lot of my work over this year. And so the presentation it has evolved over the last 12 months, something like that. But really what we try and talk about is, what is generative AI and how does it fit into AI development generally, and give you a few sort of examples of what generative AI can do. Then most importantly, and like all tools in life, it's important to understand what the capabilities of generative AI are, and then also what its drawbacks are as well. Thirdly, I think, it's very important to address the hype, and I've been doing this job for a very long time, and so I've seen lots of hype cycles, be it the internet bubble or 3D printing or Internet of Things and so on and so forth, and so it's very important to understand the reality of the technology, but also what's happening to people's expectations, and where there's a mismatch, you often get a hype cycle as well. So we talk about that. Then how generative AI can be applied across multiple sectors, and also some real world examples of where generative AI is getting used. Probably for most of us who are office workers, the introduction of Microsoft Copilot, so that's infusing generative AI into Microsoft's product suite, is the most real. But there's plenty of other examples. We're all using predictive text and things like that. We also use Netflix recommendation engines. Adobe have some very interesting products in generative AI as well. So we're at the early stages, but there are some very tangible examples of generative AI out there. And then finally, of course, because that's my job, how we invest in generative AI, and there's a whole plethora of ways we can invest in it. obviously the cloud infrastructure companies, the companies that make the components that go into those data centers and help the training and inference, as I was talking about earlier, and then software companies as well that are able to infuse and add value to their software using generative AI, and increasing value of software leads to good pricing power and so on. So hopefully that's a quick summary of it, but it continues to evolve. And if you can catch a recording or see me live, very much look forward. And if you've got any feedback, please let me know. Thank you.
Thanks. Perhaps we'll see generative AI implemented in this podcast soon. Thank you both for those great insights, and to all of you for listening. Did you enjoy our discussion on the podcast today? We'd love to hear from our listeners, so please review the show now wherever you're listening, and share it on your socials and tag us at Quilter Cheviot. To make sure you don't miss a future episode, tap the subscribe button. We will be back next Tuesday. In the meantime, head over to our website at www.quiltercheviot.com, where you can read the accompanying market overview, as well as subscribe to our weekly comment newsletter. You can also stay up to date with our thoughts on market news, industry insights, and our upcoming events and webinars on our website or our social media pages. Finally, do you have any questions you'd like to ask one of our experts for our next podcast? Simply ask them via the weekly comments page on our website. We'd love to hear your questions. And that's it for today. So thank you, Richard and Ben, for your time today, and all of you for listening. See you next time.